Thank you, Sagar Bhai, again. You're honoring the MK platform. So, no, today, just before we start, so I got a message from Viral in the morning. And, before I could open it, my heart was beating, right? Because you guys get called anywhere. And then he told me that, that Sagar Bhai is flying in from Tanzania and he's likely to be late by about 10 or 15 minutes. So the time given to us was 10:30 and he walked in at 10:30. So even the fact that the leader says the culture, so even while he controls one end of the supply chain, but this is phenomenal in terms of the timeliness. Appreciate that, Sagar. Uh, uh, just to kickstart the conversation, Robbie mentioned about the geopolitical risk. We are seeing a heightened risk environment, and you talk about the fact that you should expect this in terms of trying to pull down India for the next 15, 20 years, which is just being competitive, and we understand that. What is your own take, Sagar, in terms of what are we seeing, in terms of how is this global realignment happening, and how do you protect yourself, and how do you thrive in that environment?
See, the way we as a family think about it is global geopolitics can shift with the wind very frequently and anytime. So it's pretty foolish to make long-term investment decisions and decisions overall on the basis of how things look today, as things stand. I think in the context of how geopolitics happens, the reality is that it is today neither in mine, your, anyone in this room, or any of the political leaders is controlled. Things change very, very rapidly, and we've seen that over many, many cycles over the last couple of years. So the way we think about it is we only focus on what we can control. And what we can control is how we focus on things within our country, which is why you will see that more than 95% of what we do as a group is domestically focused. We're not a set of export-oriented businesses that are geopolitically vulnerable. We are not a set of businesses which participate in a very broad array of activities in different parts of the world. We only do one thing and one thing only, and that is infrastructure, 95% of which is within India. So for us, as a group, as a set of companies, we're not pretty much, or in a way at all, exposed to what happens outside of India and what happens in terms of relationships between countries and India. That being said, with situations and circumstances like these, I think it puts much more focus on the fact that it is critical. From one part is our business and how we think about it and how we look at it, but independently from a country perspective, how we look at self-reliance as a country, as all businesses in the country put together, right? As a responsibility, not only in terms of the aspect of creating wealth, creating value, creating making money, creating EBITDA, but also from a point of view of national responsibility. So we like to think of it in that way, and which is why I think what we do, what many of other peers do in the country, what most of the domestic companies do, becomes ever more so critical. Because at the end of the day, the only friends we have are of our own. So if all of us, our group, many of the other groups in the country, many of our other peers, MSMEs put together, I think it's a collective responsibility and task for everyone to step up to the occasion and make India self-reliant. And I think that's the only sustainable way of doing it. We're seeing the fruits of what China has done over the last 15 years in terms of the stature that they have today on the global stage, and the respect and the defensiveness that comes with that respect that they've been able to achieve. I think it's important that India gets to that point as well. We will definitely do our part as far as that is concerned, but obviously it's not just Adani, it's a collective group of people who have to step up in a significant way. So that's how we think about it.
Excellent. So I sort of agree. I can't think of any other group which has probably gone all out into infrastructure over the last decade. Almost all other conglomerates, I think, probably have sort of pivoted towards consumer-facing business, and you took an all-out bet on infrastructure, and obviously that has played out very well. Robbie, just before me to some other questions you want to allude to, you talked about it in the beginning, about that you're not worried about what is happening on the geopolitical front. But is that still a problem for export-facing industries, or you think that this is just the nature of the game?
I think it's just important to understand why it is happening so you can respond to it better. So if you look at the US geopolitics and US strategic framework, so in the US mind, there is no friend, no enemy. So the US basically, US strategic establishment classifies everybody into one of the four categories. Okay, they have conflict with certain people. They have 3 or 4 countries in the world where they're direct conflict with. Okay, they are very limited. US has very limited direct conflict with people. Then they have, you will either be in one of the 3 categories after that. You are either a strategic adversary, you are either a strategic competitor, or you are a strategic ally. In the strategic ally, they only have 2 countries, UK and Australia, which nobody else is in. Not Germany, not Canada, no, only 2. Which is that with UK and Australia, they will always consider them as allies, US that is. But even in case of Australia or UK, a little bit of it is strategic competition, and a very small part is strategic adversary. So you will always be in these 3 brackets. So India, from time to time, will, for some period, in next 20 years, India will be majorly a strategic adversary. It will shift sometimes to high strategic adversary or high strategic competitor and very small strategic alignment. So we are going to be roaming around in these things for the next generation, till we reach a point where it stabilizes. Okay. It is likely that India will stabilize as a major strategic competitor and a small strategic ally and a small element of strategic adversary. We will never be pure play strategic ally of the US. And that is the background of what happens. So when this happens, we have to understand as business, as investment, like we have investment overseas, in Tanzania, where Sagar was, in Israel, and in Sri Lanka, etc. We have to understand this landscape and operate. Because in some places, like in Sri Lanka, US will think of India as a strategic ally in a small way. So they will help, they will do things. You go to Israel, they might think, no, why are they? So they have many. So the same people will react in different ways, and we have to understand this and then set up our investments and our risk programs to deal with this nature of who we are against. And it's not that they don't like us, it's not that Trump doesn't like us or so on and so forth. There's excellent relationships, but this is the nature of the relationship. And we should know this, and we should plan for it accordingly, and should we work towards it accordingly.
Yeah, hi, Sagar, Robbie, thank you so much for once again gracing our event. So my question is more on the company side. So in terms of the Adani Group as a whole, so since the last 1 year, can you just like run down on the milestones that you have achieved and how satisfied you are with the progress? And looking at the next 3-4 years, can you give us some color on your CapEx plan? And also some update on some of the major flagship projects like Khafra ramp up, Navi Mumbai Airport, and even Dharavi development for that matter. Yeah.
So last year, we completed around 1,26,000 crore of addition of assets. We will be a little bit more than that this year. We'd hope it is more than 1.5 or higher, close to 1.6 to 1.9 lakh crore. We would like to continue that rate over the next 5 to 6 years based on what we have, rather than new things. This year is important for airports business because somewhere in the next 60 to 90 days, Navi Mumbai will be handed over for operations, so to DGCA, to security, customs, immigration checks, and so it should be operating this year. So Mumbai will have a second airport operational. we have a major trunk road expressway, which called Ganga Expressway in UP, that will come online as well this year from in our Adani Roads business. And we would have one of the major process metals business, copper smelter, complete its ramp up. So over the next 2 to 4 months, and that will come on stream. So there are 3 big assets that will come on stream. Alongside that, continuing capex. So Adani New Industry will continue its capex. It is moving towards 10 gigawatt of installed capacity for cell and module lines, and all of the ancillary infrastructure around that. So that is continuing. Normally, we expect that to complete over the next 18 months to 2 years. With the clip rate for Adani Green will remain, give or take, around 6 gigawatt level, 5 to 6 gigawatt level. So it will add that many assets this year. Adani Transmission, AES, Adani Energy Solutions, the capex period is around 30 to 40 months because of transmission and so on and so forth. We expect the book there, book is already close to 1 lakh crore in transmission distribution assets plus the smart meters. So we expect that to complete over the next 3 years to 40 months, including securing a much more islanding capability, removing the islanding capability risk of Mumbai by the HVDC line will complete as well, connecting Mumbai to rest of the grid. So there are key assets right across the board. We expect our conventional power business, thermal power business to practically double in size over the next coming 3 to 4 years. We have flagged that. Then in relation to the Adani Enterprise, the businesses within Adani Enterprise, the roads, airports, major capex. So we expect that the core infra capex, based on the projects that we have over the next 3 to 4 years, say we have good visibility up to 2031, should be in the order of about 9 lakh crore.
Got it.
No, I think I agree with Robbie. I think the most important thing that we have today as a group is execution on our capex plans. There is nothing that is, Robbie would have showed the slides where you would have seen the kind of ROAs that we are able to achieve on our assets in such kind of an asset class, 25, 30-year fixed cash flow stability. You don't get these kind of ROAs anywhere in the world. So for us, the more we do, the more value we generate, the more profitable we become, and the more sustainable, robust, and stronger we become as a group. So for us, the single most important thing is executing on our capex. Last year, we've done the highest capex that we've ever done as a group in our history. This year, we will only increase that number, and we look to sustainably continue that number going forward for the next 4 or 5 years. We have completed 2 acquisitions, one of ITD cementation and one of PSP projects. Both are EPC companies which help us strengthen the ecosystem that we have around us to be able to deliver on the capex goals that we have as a group. So we will be looking for more of such opportunities where we can build a very strong, resilient, robust ecosystem of expertise, experience, and equipment that we have available to our disposal for executing on the capex plans that we have as a group. So we'll be doing more of those things, but I think these are some of the things we've done, and you'll see a continuation of these things as we move forward.
Right. So Sagar, coming specifically to the energy business, so can you just run down how the ecosystem is, evolving, and what are the key trends you are seeing both in terms of pure renewable energy as well as certain aspects like PSP and BESS, as well as green hydrogen. I think in green hydrogen, the government has targeted 5 million ton production for India as a whole by 2030. So can you just run down in each of these aspects how we are placed as a country, and also how Adani Group is going ahead with it?
No, I think from a energy point of view, it's a very simple question to answer. I always say this to anyone who asks me, and it's a very simple answer: the more, the merrier. We are in a overall power deficit scenario, and as in India, we will continue to be. for the next 20 years. So as much as whatever Adani Group can do, as much as what all other power producers in India can do, as much as all government companies can do, if they all put together, execute at their full potential, it will still not be enough versus what the country requires. I'll give you a small example. Today we're at about 500 gigawatts, give or take, of installed capacity as a country. And we're roughly about 1/3 in terms of per capita consumption of electricity compared to world average. World average includes a lot of countries that are not as well off as India. So it includes many of the African countries, many of the other countries all across. So forget comparing ourselves to China or comparing ourselves to Europe or comparing ourselves to the US or Middle East, which are relatively much more developed countries. If you just compare ourselves to world average, we need to increase our installed capacity by 3 times just to get to world average. That means 1,500 gigawatts of additional installed capacity that is required over the next 12 years. So just to get to even below where China is today in the next 12 years. So what India has done in 75 years of independent history has to be done 3 times over in the next 12 years. So that is the scale of challenge that we're looking at in front of us from an overall macro perspective. Now, obviously, when you talk about numbers like this, if you want to achieve numbers like this, and the only other country in the world where such type of addition has happened in such a time frame is China. There is no such other example anywhere in the world. And if you just look back to China and learn from them, right, it's the closest relevant example that is there for India. And you see, it's for them, for a good 15 years, the philosophy has been just do as much as you can of everything that is possible. So I think India is following the same path. In a way, it is good. It's not happening from a top-down government push perspective, but it's happening more from a demand-supply equation perspective, which is, I believe, a little more fundamentally sustainable and probably better, especially for a country like India. But in a way, we will see a very significant addition of thermal capacity. I believe us and NTPC put together will be a predominant majority of the capacity addition that happens in the country. Our stated goals, targets in our presentations are that we will double our existing fleet. So that's we're at about 17 gigawatts operational capacity. We'll be at about somewhere around 35 to 40 in the next 4-5 years. So that's a significant addition in our fleet. Our internal target is even more than that, significantly more than that actually. In renewables, we are currently at about 16 gigawatts of operating capacity. We'll be at 50 gigawatts in the next 5 years. So this will again be one of the largest greenfield capacity additions of renewable power done by any private company anywhere in the world, ever. So it is a very, very, very tall order and a very significant ramp up that is happening in that. We're also focused on PSPs. We are executing about 10 gigawatts of PSPs in different places as we speak. But obviously, as any of the other renewable companies, we're also working on batteries in a very significant way as well. So I think this year, we will probably be the company that will add the maximum amount of installed battery generation capacity in the country. But next year, we expect that we will be about roughly double than all other battery storage capacity in the country put together. We will double that just ourselves next year. So we have very large plans in terms of what we will do for battery storage. But as I said, from a macro and India perspective, anything and everything that you can do is not enough. So because there's a huge supply-demand mismatch, and we're focused on making sure that we execute to our physical execution capability limit. So everything that goes to de-risk our execution is what we are focused on today. Do we have the land? Do we have the connectivity? Do we have the permits? Do we have the approvals? Do we have the environment clearances? And do we have all the steps that need to be checked off before physical execution on the ground can start? So we've been focused on that very closely since the last 2-3 years. We're at a place where across the board everything is de-risked from a capital perspective, from a permits perspective, from a land perspective, from a resource perspective. So we are there, which is why we were able to do so much capex last year. which is why we'll even increase our capex this year. About 80% of that is going into energy. And so as a group, we are very focused on energy, and it's extremely profitable because there's very few other groups who are in a place that we are, who have these quantum of resources, who have this level of lands and permits and ecosystems available to execute at this scale. So I think outside of the government, we are the only group in the country who can do this at that scale. And we're very focused on achieving that over the next 5 years.
Right. Thank you so much for this detailed explanation. And
So, yeah, in the interest of the timeline, we'll open up the floor for the questions. So please identify yourself and the firm.
Hi sir, Ashish Golitsha from V Ventures LLP, Gurgaon. First of all, heartiest congratulations for execution. Whenever it comes to execution, Adani is one of the best players. That doesn't need to be told. किसी को भी infrastructure ETF लेना है तो अदानी का basket ही काफ़ी है. Sir, one question which I feel that if you're comfortable, what are the companies which you have lined up in Adani Enterprises for demerger, and if you could give us the timelines? It would be very great for the investor community because we have been waiting for 4 or 5 years to know what are the companies or what are the jewels in Adani Enterprises incubation which are lined up for demerger. It would be very great and we'll be thankful to you. All the best to you, sir. Thank you.
I think we have, we have a mechanism by which we look at when demerger or dividend to shareholders, basically to Adani and enterprise shareholders. So we will have, there are two distinct businesses which are broadly in line in terms of where they are, which is Adani Airports, which we have already said will meet our technical criteria to demerge by 2027. Then it's a question of the board and going through the processes of those respective boards to take that step. The other one would be that by that time our metals and metals business portfolio will also be ready. So that's the other business that would be completed. Theoretically, you can always look at roads because the scale and size is not an issue there. But I think we want to develop a little bit more on the risk aspects, and we can explain to the market that network risk or traffic risk is not a bad thing in India; it's a good thing. The ANIL is the other business that is there, which Sagar alluded to in terms of investment as well. There we are in the process of doing electrolyzer, off-grid electrolyzer testing at the moment. So we have operating electrolyzers off the grid. We hope to get what is called the VAR curves, performance curves, over the next 18 months. And then that would be, but that is further away. So the closest, as we have flagged, is airports and also our metals businesses. No, the data center is too early we need to develop, as Sagar mentioned, one of the core things in India we want to develop is the service capability. Otherwise, just a property rental business. In relation to defense, the way the defense is just a little bit too early. The way defense is that defense is a technology and business plus precision manufacturing with a small element of defense. So primarily it's a technology plus precision manufacturing business. So we have to develop the capabilities of scale in this. And you can't do all of this yourself. So it becomes an ecosystem. So if you look at Lockheed or look at Boeing or look at Airbus, there are 30, 40 companies which are associated with them for Airbus to be what it is. So similarly, we have to develop that ecosystem, and we are long way from doing that at the moment, because the first two, which is the tech and the precision manufacturing capability, is where our focus is today. The service business and the defense is a smaller element. So while the headline comes from there, but the bigger focus is on those two elements.
Sir, the question is with respect to power sector. So there was a news that basically battery energy storage can be utilized for storing thermal power. So my first question is that is feasibly whether it is possible. Second, if at all, if it happens, whether incremental power capacity, power addition from thermal and renewable energy requirement will be lower.
No, I think so. Batteries are basically a storage source. So they store electricity. Doesn't matter where the electricity comes from. So if it's from thermal, from renewables, from hydro, from anywhere, wind, whatever it is, they can store. Batteries can store electricity, no matter where it comes from. From an economic perspective, the economic case for battery is very heavily reliant on the cost of the input power that goes in. Inherently, thermal is more expensive than renewables because thermal is 24 hours, renewables is for 7 hours in a day. So from a capex depreciation and from an input power perspective, thermal, if you use thermal power to charge batteries, the economic case becomes less attractive. So typically you will find, and which is why you find renewable projects merged with batteries and not thermal projects. I think to your question of will we need less thermal or less renewables because batteries are coming in, it's quite the opposite. Again, you have to understand batteries only store power. For batteries to store power, power has to be generated. So the more batteries that come, the more renewable you need to be able to power those batteries and to charge those batteries. So the more the addition of batteries and capacity addition of batteries happens, the more quantum you need on the generation side so that those batteries can be adequately powered and discharged at peak periods. So it's quite the opposite.
Sir, just a follow-up question. So basically, today the thermal power plants are operating anywhere between 65 to 75 PLF. So during peak hours, like 12 o'clock, when solar power gets into the grid, obviously thermal has to back off in certain cases. So effectively by having a battery storage for thermal, the capacity utilization can go up significantly, right? So with if at all, if that happens, the incremental capacity addition in thermal may be lower. That is what my question.
Again, I think it comes to the question of economic case. Again, even if you charge the battery at 12 o'clock, for example, right? The cost of thermal power is still that. There is, yes, you can consider it at variable cost, but in most cases, even the variable cost is higher than the cost of renewable power that goes into the batteries. So personally, I don't think that a lot of thermal power will be used specifically to charge. Yes, power from the grid can be used because of thermal power going in, because of renewables going in, grid prices may come down. And power from the grid can then be used to charge batteries for certain time slots. But specifically thermal power going into batteries, it's not a very attractive business case today, at least.
Sure. Understood, sir. Thank you.
Thank you.
Yeah. Hi.
Sagar, sorry. Yeah, please, Sachin.
Yeah. Hi. Sachin here from MK Investment Managers. Just an extension to that on the storage, battery storage side. So as a group, have we pivoted to this PSP now, the hydro thing, more to compared to the BESS, and why so, if at all?
No, both. So as I said again, we are not married to one specific technology. As much as we can do batteries, we will do batteries. As much as we can do PSP, we'll do PSPs. As much as we can do thermal, we'll do thermal. As much as we can do renewables, we'll do renewables. Both solar, wind.
But is the proof of concept very well established on the PSP side, and you think
Yeah,
that will be more effective and efficient compared to BESS? Is that the thought process internally?
So again, will it be more effective and cost efficient? I think from an economics point of view today, renewables plus battery and PSP on the and renewables plus PSP on the other hand, more or less stacks up very near to each other. But again, what you have to understand is what we're trying to solve for is not what is relatively better between the two, but both. Because we're not trying to solve for between PSP and batteries. We're trying to solve for India's energy demand. India's energy demand needs thermal, needs PSP, needs battery, needs renewables. And as much as PSP you can do and as much as batteries you can do, it helps with more and more absorption of the renewable power in the grid, because PSPs and batteries can be ramped up and ramped down very, very quickly. So it helps from a grid stability perspective. But economically speaking, both cases are very near each other in terms of, from a cost point of view, how they stack up.
Okay. So what you're saying, it's an and situation, not an or situation.
Absolutely, yes.
Great. Thank you.
So we're short on time. I'll just come back with the last question. You talked about $100 billion of FFO over the next 10 years, and that is unlevered. And, probably you can easily lever it 1 into 1. The question I'm coming to, Sagar, is that when you want to hyperscale the business at such a level, right, it's not only about your ambitions, your ability to execute, but also about how you prepare the ecosystem for it, in terms of talent aggregation and stuff like that. Is there a process, some kind of process that you follow, because this is huge? And yeah.
See, like I said, when you are like us, you invest in productivity. There are many basic things that which numbers don't represent. So for example, when we set up the first supercritical power plant, we also set up the training institute, how to operate supercritical machines in a tropical environment, because supercritical machines were designed for temperate region. So they're operating in India in tropic. So we have to, which is called ATR, which is our training institute. Then we also had to set up the indigenization of the spares. Otherwise, you wait 6 months before the spare comes if something goes down. Similarly, we build infrastructure. We are not in a sort of, say, a building like this, where you can put security guard outside and you can secure the building, because you are securing a location. We are infra, which means our logistic businesses are going thousands and thousands of kilometers. Our rail tracks, our internal container terminals, our sites, their perimeters are bigger than countries. Okay, so now how do we secure that? We can only secure those things if local people want that asset. Okay, so the creation of local vendors, to hire people locally, now you get a gap between skill versus what the local capacity is. So to develop the training institute to train thousands and thousands of local people, so that only locals can. So we have a policy, wherever possible we hire local, wherever possible develop a local vendor. And that focus on, this is the learning and development and training, it from an executive point of view comes to me, from other point of view is with Karan, who looks after this. So it's a relatively senior focus. So Karan, Adani looks at the training aspect, I look at learning and development aspect. And there's excessive focus on this. So that you can hire people, raise their income levels. Okay, well, then that is like raising for the same hour work, raising their productivity. So we need to, we make a massive, I use that example, when all this noise was going around. We have 426 locations, large locations, which individually will be big businesses if they were individually listed on the stock exchange around the country. If we're 10 to 15 vendors, 20 vendors, 50 vendors, deal with them every day. Every day, if we don't have that local development plan, there could be more than 10,000 complaints against us. Okay, in a year, conservatively speaking, more than 500,000 complaints can come. Yet you hear 1 or 2 things about us. So it goes to the fact that despite being exposed to millions and millions of complaint possibilities, very little is heard about us compared to the scale at which it can be heard. So that focus to develop local communities, income of local communities. Sagar knows this. I can give you the example of Goda. When we went to Goda, Goda was 17th out of 24 district in the state. Today it is 7th on indicators. Okay, that's after we start the businesses. So that aspect is a central aspect to our business. Sagar, you want to add something?
I think what we're also shifting as we move forward is our philosophy of partners rather than vendors. So when we grow, when we want to do things at 10 times the scale that we used to do only 5 years ago, right? It becomes very important the kind of ecosystem of partners that we work with. So again, from a sustainability perspective, the acquisition of ITD cementation, the participating in that, participating in PSP projects, participating in many of our other partners that which will start becoming public over the next couple of weeks and months, is one very important part in that journey, because we understand that all of this is not something that just we can do just by ourselves. So we want to build, and we are building, and we will continue to build a very robust ecosystem of partners who work alongside us. Obviously, what goes without saying is the talent enhancement internally. So we are, I would say that today, 90% of our chairman's time is spent on two things, and two things only. Creating this ecosystem of partners and developing, growing, and strengthening our internal organization to be able to manage this effectively. So these are the two most important things for us as we see the next 5 years of our group. It's something that our chairman is very, very, very focused on. As I said, he spends more than 90% of his time on these two things. I think again, as you know, capital for us is off the table now. That's not a constraint, that's not an issue for us anymore. So I think our physical execution capability is what we are razor sharp focused on. And whatever we need to do to get that fully de-risked and fully aligned is what we will continue to execute on. Thank you so much.
Thank you guys for this great conversation, very engaging. Can we have some gifts for the guests, please?